Good morning, everyone, and welcome to our next presentation. Our next presenting company is International Consolidated Uranium, and presenting on behalf of the company is President and CEO Phil Williams. Phil, go ahead.
Thanks, Eric, and thank you very much to Red Cloud for giving us the opportunity to present here today. This is actually the first time that we're presenting the International Consolidated Uranium story to a broad audience. In fact, the name we just changed a few weeks ago. Used to be formerly known as NX Gold, and the new name obviously belays the new strategy, which, as we say on the first page here, is we're out to consolidate the global uranium sector. This picture, and Derek and I were just talking about this is a picture of all the uranium deposits around the world, and so we think there's lots of opportunity for our company. I'll launch into the presentation. So we have a disclaimer. And so here's the overview of the company, and this is what we're going to talk to you today. As I said, our strategy is to acquire and develop uranium projects around the globe. We've already completed 2 acquisitions of options on projects in Australia and in Nunavut. We'll take you through those in a few minutes. I think the question is why uranium and why consolidation, and we'll walk through that. We're obviously bulls on the space and think that the market is going to get significantly better in the coming years. It really has just emerged out of a 10-year bear market. And why consolidation? This is a model for the sector that's been proven. And for those of us that have been around for long enough, we've seen this play out. We saw this play out in the bull market of 2005, 6, and 7. And so we're replicating that strategy. I'll talk a bit more about how successful that can be. We have put together a very experienced team in the space. The company itself was started by the management from NextGen as well as Mega Uranium. We'll give you some of the names there and talk about that side of it. And then myself, I've joined the company earlier this year in March, and I've been in the space since 2006 in various capacities. And that map that we're talking about traveled all over the world, visited north of 100 projects in the space. We also, as I mentioned, the name of the company used to be NX Gold, and we do still have our gold projects, and those represent upside to what we're working on the uranium side. Here's the capital structure. We just completed a fundraising, very much thanks to Red Cloud for bringing in quite a lot of that money. We raised $3.2 million. We now have a market cap of about $11 million. Importantly, $5.5 million of cash and cash equivalents. The cash equivalents, we actually have some shares of NextGen there from a previous deal. But so we're very well funded relative to our market cap to execute on this business plan. In terms of our shareholders, we have a good register with Mega and ISO, both owning 4% from the acquisitions that we'll talk about. Management and insiders, most of those shares were purchased recently in this placement or the previous placement. And so we're starting to build up our positions. And importantly, we have a good base of institutions. Largely they came in from this recent financing, including Sachem Cove and Segra Capital. For those who aren't familiar, those are specialist uranium funds. We were very excited to have them join the register along with the other institutions. I think it bodes well for the company going forward in terms of our ability to access more capital and execute on the plan. Here's the management team and board. As I alluded to, I've been in the finance business for 20 years, but in uranium since 2006. I've been on the sell side as a research analyst. I've been in fund management. I've also been in investment banking. Immediately prior to CUR, I started a private uranium royalty company, which went public last year. So I've been around the space for a long time. One of the first people that I brought onto the team was Peter Mullins, name that some of you who have been around the space for a while might recognize. He was at Laramide in the beginning when they put their package of projects together. And then on the board, as mentioned, the company was founded by the people behind NextGen. So that's Lee Currier and Trevor Teal. And so they stayed on the board. We've added a few new directors, and we also have Richard Patricio, who's not on the board, but is a very important part of the company and represents Mega, obviously a big shareholder of the company and supporter. So why uranium? This, I'm not going to belabor this, and this slide we've borrowed from Sachin Cove, our shareholder. Obviously we're in this space because we think there's a bull market coming. The narrative really is what it says here is that we believe nuclear power must be part of any climate change playbook. Right now, price has come off the bottom, but it's still not where it needs to be to bring on new mines, let alone existing mines make money. So we think that the price is going to move. We don't know exactly when. Our plan, of course, is to put as many assets into the company prior to the move at what we believe will turn out to be very compelling valuations. Consolidation, this is a proven strategy. We've got a case study here of Mega Uranium. Again, Mega is a big partner to the company. And what we did is we looked back between 2005, or beginning of 2005 and the end of 2006, and this is really when Mega was formed, and its strategy was consolidation. And over that period of time, in conjunction with the uranium price that was moving and had gone from sort of in the 20s up into the mid 60s on its way to the peak in 2007, Mega undertook 9 acquisitions, raised about $50 million in capital. Importantly, over that period of time, the share price went up 25 times and the market cap went from 15 to $940 million. We would obviously love to replicate that success. And certainly with the benefit of hindsight, we think that we'll be able to execute this strategy in a similar vein. I think another important part to the story is what did Mega do after they made all these acquisitions? And we just listed on the right-hand side all the ways that they realized value from those acquisitions, including at the top of the list is Mega was the group that sold the Canadian projects to NextGen, which is currently the Arrow project, the Arrow deposit. There are some other companies that also executed this strategy, which are still around and not around and executed successfully, namely Paladin Energy Metals and Uranium One. So now we'll launch into the projects to talk a bit about the projects that we've acquired. These are the first projects, the Ben Lomond and Georgetown projects in Queensland. So it's just a map showing you where they are. The reason that we're attracted to these projects, and when we look at all the projects that we want to acquire around the world, we spend a lot of time obviously looking at them technically, but also looking at what kind of money was spent on them in the past, and we're looking to buy these projects at a low value relative to what's been spent. Historically, here Mega acquired, this was the first project that Mega actually acquired. They spent over $10 million on it. And what we like about this project particularly is you'll notice that it's not large on a kind of world scale, but it is high grade. And we think that in Queensland, a project with these characteristics, high grade, potential low capex, has a good chance of being the first one to go when the price cooperates, but also some of the politics in Queensland sort out around openness to uranium mining, which we think has a real chance of happening in the next short while. There's a second project also in Queensland that we're acquiring, Georgetown, which is located about 500 kilometers away from Ben Lomond. And one of the things that we're looking at as far as the development scenario is putting a processing plant somewhere in between the projects where we could jointly process these projects as satellites to one another. Again, here we've got resources, and one of the keys to all the projects that we're looking at is we're looking at acquiring projects that have resources from the past. One of the interesting things about the way that we're acquiring these projects is we're doing them in option agreements. As a very small company when I joined, and still a relatively small company on sort of the scale of uranium project companies, we wanted to figure out a strategy and a technique to bringing assets under our control without outlaying vast sums of money or shares up front. So on this slide, we show the acquisition terms, and this is the structure that we're looking to do with all of our acquisitions. It was an upfront payment of shares, warrants, and cash to Mega in exchange for the right to purchase the project. In exchange for the right to purchase the projects for a period of time, in this case it's 24 months, and we've fixed the price the amount of money that we have to pay to get the project, and we can make that payment in cash or shares at our election. And then we've also have this kind of unique structure where we've got contingency payments. So in the case that the uranium price moves higher, we will give Mega future payments tied to that price. So at $50, $75, and $100 uranium, we owe future payments to Mega. Again, we can make those payments in cash or shares at our election. And you'll see that we've got a small amount of work planned here, but really the idea is we're doing desktop work. We're not spending a lot of money on the ground until one, we acquire the project, but two, we also see the move in uranium is for real. Bernie, maybe I'll answer that question at the end. Our next project that we've also got an option for is the Mountain Lake project in Nunavut. We did this transaction with ISO. This is where it is on the map. Again, this was an option. We'll talk about the terms here. Again, it's shares up front, $1 million payment to acquire the project outright. Again, we have 24 months to exercise the option. What's interesting, a couple of things that are interesting here is obviously it has a resource, 8.2 million pounds, again, high grade by world scale, about 0.2%. We think there's good potential in this project as well. There are some higher grade areas that never really followed up. This project, again, as I said, is owned by ISO. ISO hasn't really done any work, but they have put together a good plan for us. And so when we make the decision to exercise the option and go to spend money, we have a sort of ready-made plan. The interesting thing about this project, again, for people that might have a memory that goes back to the previous bull market, Mountain Lake was in the day owned jointly by two companies, Tri-X and Pitchstone. And while both those companies had other projects, at the peak of that market, their market caps combined was about $250 million. And this was their one resource project. So we think that we're picking this up for a very good price, or will be a very good price relative to the value it will obtain in a higher uranium market. So thanks to the Red Cloud guys, they put together this comp table, and this just shows where we land on an EV per pound, and so of course we're shown at the far right end of the scale, and we think that this is the opportunity for the company as we acquire additional resources. We can start to move up that scale. And really, that's the story to date. I think if we want to sort of summarize where we are, we've got an attractive portfolio of projects already. So we have projects in top tier jurisdictions. They're high grade on global scale, and they have significant past expenditures. I think where we're going is equally as exciting. We're very active, evaluating new opportunities, and with the $5.5 million that we have in cash and shares, we've got quite a bit of firepower to go and pursue those. Our approach is a portfolio approach, and having been around the uranium space for a long time, we know that jurisdictions can go in and out of favor very quickly, and so we want to give our investors exposure to a broad range of projects across different geographies, geologies, cost curve. I think as a group, we're also very good at structuring deals and getting deals done. And we take a project first rigorous evaluation process to looking at projects. We think it's a very compelling valuation at $11 million with that 5.5 of working capital, compelling acquisition metrics on the projects that we've acquired to date, and what we think we're going to get the next series of projects done at. And also there's upside from our gold projects. And the real key is just the management and board. We're uranium guys. We've been around for a long time. We know the projects, we know the people, and we know how to get deals done. So that's the end of the formal presentation, Derek. I do see a few questions have come in on the side.
Yeah, so why don't we deal with those first? first one from Bernie regarding Queensland. Something you and I were talking about before we came live.
Yeah. So the situation in Queensland is that the current government has a policy against uranium mining. It's not a law. And quite frankly, and this is what Derek and I were talking about, is it hasn't been tested. So for the last 10 years, nobody's really been trying to do anything in the state. Where we got interested is, one, there's an election coming up at the end of the month. And so we may see a new party come into power that would be more favorable towards uranium. But even the existing party, again, having said that it hasn't been tested, we think that in this current environment, COVID environment, and just people becoming generally more accepting of nuclear power and uranium in Australia, and the requirement for economic development in the country, we think that we're going to see a thawing of the views towards uranium mining in the state, irrespective of which government comes in. So, one of the things that we've been spending a lot of time is just doing work with local stakeholders, talking to people in government. We're not making a ton of noise just yet. We're going to see how the election results come down, and then we're going to put forward a measured plan based on the results of that and what we're hearing on the ground there. And maybe I didn't mention this, but Pete Mullins, who we brought on early on after I joined, he's based in Brisbane. He sits in the country, in the state there, and has very good intelligence on what's going on the ground. So he was the biggest advocate for bringing this project on, and so we'll sort of follow his lead on how to best try to push the project ahead. But again, it's not a law; it's a policy at the moment.
And I guess the other point you made before was that your projects are smaller relative to the other bigger projects in Queensland, and so it might be a little bit easier to get that through than versus the bigger ones.
Correct, and it's not a knock against those projects. Those are great projects, but our position or our thought is that if you start small, we think that will have a easier chance potentially getting over the hump with the politicians.
Right. Next question from the line is obviously International Consolidated Uranium was once NX Gold and does still have some gold projects in it. Perhaps talk a little bit about what the plan is for those assets.
Yeah, look, we're quite open to what to do with those assets. So over time, they will not be part of this business, but there's value there, and obviously we recognize that the gold market's exciting, and these projects they were brought in for a reason, and so our goal is to maximize the value to CUR shareholders from those projects. How that looks, I think that so that all of those potentials that you've listed there, Ernst, are on the table. We're going to take a measured approach to realizing value from them. And it's really just about how do we get the maximum benefit to CUR shareholders, and whether that's monetizing them and using the money to deploy into this business plan, or taking equity in something, or joint venturing them. I mean, we're open, but we're not under any pressure to move quickly on that. We'll just do the right deal when it comes along.
What's maybe the follow-up is what's the holding cost for those assets as we speak now?
Oh, the project in Nunavut is on force majeure. So right. Other than nominal rent in the low tens of thousands of dollars that we've just paid for that project, we're not spending any money there. And in Australia, it's pretty low. It's less than $100,000 per annum to keep those claims in good standing.
So low costs and no rush, but an opportunity. And I guess
that's the model, keeping our costs down on all fronts. So I'm the only full-time person in the company. All of the projects that we've secured under option, we're not responsible for paying the annual cost of those projects until we exercise the option. So we have a very low burn rate as it relates to running the business.
And I guess that leans into Bernie's next question, which is what is the expected G&A per year?
Pardon me?
For International Consolidated Uranium.
So before any project-related work, we're on the order of $600,000 a year on salaries, public company costs. I mean, it's very, very low.
And that's very good. 600,000 is an aggressive number to be at. So congratulations on that, Phil.
And there's a little bit of buffer in there. I can tell you, this is our money. This is like, we've all written checks. We're not spending money on that kind of stuff. Everything is targeted at new project acquisition.
Excellent. All right, and with that, we'll leave it there.